What's good, family? Been a hot second since we've done one of these, so no intro, we'll just try to keep it short today. Y'all are watching Sekidera, and this is what we're watching for the first week of June 2021, and today we're talking about penny stocks. Now before I get into it, I just want to remind you that this video exists for educational purposes only and is not intended to replace financial or legal advice from a paid professional. What you do is on you, and what you should always do before doing anything is research, so we'd also like to add that no mention of any stock on this channel should be taken as a suggestion to buy, sell, or hold. We're just trying to shine a light on the lesser known stocks in our local stock market. Also, we'd love it if you did us a big favor, just scroll down a little bit, hit the like and subscribe buttons, and stay updated with the content that we'll be dropping in the future. Now let's get to it. Alright, now if you've seen The Wolf of Wall Street, maybe you've heard the term penny stock before, and considering the way that they've been presented in that movie and in the news, I wouldn't blame you for staying 1,000 feet away from it at all times. But for those curious, today we're going to talk about what they are, why somebody might buy one, and then we're going to point to a couple penny stocks that are on our radar at the moment. Now, let's start with the definition. What exactly is a penny stock? A penny stock is a stock that trades at a very low price, some say below $5, others say below $1. Now in Korea, we just ballpark it between maybe 1,000, or less than 1,000, or less than 5,000, which would actually apply to a massive number of stocks on the market at this time. Generally, these stocks belong to micro, small, or mid-cap companies that don't trade very much on the market and are ultimately less liquid than the market leaders. Now, while many penny stocks trade on the unregulated OTC markets, there are also many that trade on the big exchanges, whether it be the Nasdaq, the New York Stock Exchange, the KOSPI, or the KOSDAQ. However, due to the small size of the corresponding companies, as well as the common lack of liquidity of penny stock positions, penny stocks themselves are considered highly speculative and can be more risky than larger firms who have exponentially larger revenues. So that begs the question, why do people invest in low liquidity, high risk stocks? Well, for one, their low cap means that they have significantly more upside than established and mature firms. On top of that, their lower price means that their investor base includes, well, anybody with an investing account. Furthermore, the lower price generally means one should expect more volatility, as even a change of 2 or 3-1 can put a position up or down a couple percentage points, and it really wouldn't take much capital to sway the stock one way or another depending on the sentiment and the needs of current shareholders. Often enough, the stocks that go up 80% over a few days are penny stocks, since it takes comparably less capital to send the market price up or down in a short amount of time. They're also the stocks that leave new investors with little understanding of trading or investing holding the bag once the institutions and traders have had their fun. Thus, penny stocks are a fun game for those looking to gamble with limited capital, since the low buy-in cost for outsized potential for gain can mean a big run in a short amount of time. Still, the risk of the stock's price retreating at the same rate is what makes it frustrating for those who don't really get the risks in the first place. Now, even if you don't think penny stocks are right for you, it may benefit you to watch this video to get a better understanding of how and why one might consider buying a penny stock in the first place. So, the first stock that we're going to talk about is a company called Seijong Telecom, which has seen a month-long downhill slide and floated around the high 600 to low 700 level for the past few trading days. The company behind the stock is, as you can tell, a much smaller telecom operation than industry leaders like SKT, KT, and LGU+. Generally, Seijong Telecom functions differently from those companies in their customer-facing business, providing low-cost alternatives for mobile data plans through their Snowman platform. Now, unlike KT and SKT, who have built and maintained their mobile network infrastructure nationwide, Seijong leases network connectivity from KT and resells it to customers at discounted rates. Within the commercial mobile sector, Seijong has been expanding their operations to provide low-cost 5G plans, low-cost LTE SIM rate plans, and general low-cost mobile phone services to a wider consumer customer base. Beyond this, Seijong plays a larger role in the market as a network connectivity provider for fiber optic cabling. Their optic cable network spans the majority of the Republic of Korea, and they've partnered with major international players like SoftBank, Verizon, and China Telecom to install underwater international connectivity cables that span the Pacific between Japan and the US coast, as well as traveling westward along the Southeast Asian coast, through the Suez Canal and up into Western Europe. Thus, for a penny stock company with a market cap under 1 trillion won, the operations of this company are pretty extensive. Other significant initiatives of theirs has been the focus on blockchain and the development of a blockchain-based real estate investment and profit-sharing service. There have also been a few things happening in the news recently that may make you want to hold off and wait to see how the company takes them, such as the sale of their 2 big data centers in both Seoul and Busan to the Taiwanese tech giant firm Digital Edge. This may be a signal that they're pivoting away from the data cloud storage side of their business to focus on other things, which would actually be kind of wise since the sector is currently being dominated and will be dominated in the future in Korea by KT's recent expansions across the country. Now that we have a quick understanding of the company, let's take a look at the numbers. Over the past 5 years, the trend has been solid with regards to top-line earnings, seeing growth in sales over the past 3 years with a minor dip between 2016 and 2017. While this is something we like to see, we have to take a look at their actual yearly reports to understand the source of the revenue and identify whether or not it will be affected by the sale of their data centers in the long run. If you've watched our other videos before, you probably already know how to check for this basic stuff yourself, so let's check the noteworthy stuff like their PE ratio, which was at roughly 5.3 at the end of the first quarter of this year, with their price to book around 1.1. With such a large shift in their infrastructure, and with the sale of their data centers and the pivot to more consumer-facing income streams, it's difficult to know what their earnings will look like going forward, or how the influx of cash that they'll have received in the past year and a half will affect consumer sentiment in the short term, and that's also kind of the thing with penny stocks though. They're really difficult to predict, and as a result, they're fundamentally speculative picks, but with shares selling at less than 1,000 won, I mean, how much worse of a gamble is it than, say, a lottery ticket? But anyways, one thing that we do really love to see is the bolstering of their working capital and their extremely well-covered total debt. This is because at the end of the day, it's extremely difficult for a company to go the way of the dodo if their debt can be easily covered. Thus, as a speculative move, buying in now may not cost you as much in the worst case scenario down the road. Not a bad idea to at least throw this joint on the watch list. Alright, now next stock we're going to talk about is one that's a personal favorite of ours, not because it's great, but because over the past year, month, even the past week, its chart has been breakdancing like Eddie Gordo. Now what am I talking about? It's a little stock called Organic Tea Cosmetics. In short, Organic Tea Cosmetics is a cosmetic brand based in Hong Kong but listed here on the Kosdaq. We'd been meaning to talk about them for a while since they were sitting around the 3 to 4 times earnings for a hot minute, but over the past week and a half, they've jumped from 729 won last Tuesday to 1,069 won at close a week later before parachuting back down to 906 at close on Wednesday. Now, as long-term investors, we don't usually care about this type of volatility if the company itself is strong, but at the moment, I just want to use it as a way of illustrating how random and volatile penny stocks can be, since it would take very little money for a fund manager or a retail investor with considerable cash at their disposal to sway the value of the stock or sway their momentum in one direction or another. Now in terms of numbers, even with the stock having jumped 15%, it's still sitting at a PE of 6 with an earnings of about 168 won per share, and it's been pretty near the top of the low PER rankings for months, dropping its price to as low as 517 won in mid-December, and with a lot of volatility in between as well. Last year, we saw their operation expenses surpass their sales in 2 of the 4 quarters as they eked out a tiny net profit at the end of the year, which may have had something to do with the pandemic, but like Seijong Telecom, we also see that their debt is well covered by both cash, assets, and equities, so it's not too worrisome. Whether or not you want to buy in, well, that's up to you, but if you're like us and you find volatility in penny stocks simply fun to watch, it's not a bad stock to throw on the watch list, since the thing has been looking like a heartbeat monitor for the past 6 months. Alright, that's it for me. Hope you got something out of this episode. I know penny stocks can look tempting as fuck when they're flying up in price, especially early in the morning, but if you're in this game for the long term, it might be better to look at such jumps as distractions, lest you dump your monthly investment into one at its peak and get left holding the bag after all is said and done. Anyways, we'll be back with another episode soon. Hope you enjoyed this. If you did, please share it around. If you didn't, please share it around. Take it easy, fam. We'll see you soon. Oh, also, don't forget to check out our friends over at This Korean Life and at Hanggang Magazine. Peace, everybody. Love.